And this is where you could maybe pivot that conversation from this is dreadful and I'm thinking about me dying to actually this is me thinking of how would I want my will to be carried out? How would I want my wishes and the things that I find important to come to fruition?
For our FinTech Spotlight segment this month, we are featuring our sponsor, Ethos, affordable online life insurance for families. I've invited a member of the Ethos Enterprise Account Management Team, Marty Evans, on the show to help us answer the question, how much life insurance do I actually need, and how Ethos can help. Welcome to the show, Marty.
Oh, I'm excited to be here. Thanks for having me.
Absolutely, man. Well, this is an important topic for families, and it could be one that's kind of confusing, too, for families. So I'm glad that we're here to talk about it. First of all, why is it important for parents to have life insurance in the first place?
Yeah, I mean, it's not the most exciting, dinner conversation. Think about, well, what would happen if you weren't here with your family anymore? But the reality is you really need to have all of your bases covered if something were to happen. And in the event that, for instance, a breadwinner of a family were to pass away, about half of those families in the US experience a financial hardship within 6 months. So the severity is immediate and it's severe. So it's something that you just don't want to end up with your family in that position.
Yeah, it's a very good point. Again, not something we all want to think about, but important that we're discussing it today. Let's talk about the question then, how much do they actually need? How much life insurance does someone need?
Yeah, well, if you start from the framework of, well, what would I want my family's income to go towards? Then that's when you can really expand your both planning and your imagination and just self-reflection on what's important to you and what would you want to contribute to. So the quick and easy rule of thumb is just 10 times your income. And so just add a zero onto what you regularly earn. And a lot of people will think, well, I'm actually good. I don't need a policy because I get coverage at work. But the work coverage is typically only one time your salary. And if you were to leave that job, then you also are leaving your policy. So you won't have coverage anymore. 10 times your income is the quick and easy math. The more involved way is called the DIME method, DIME. And so you just work through your debts, excluding your mortgage. So you go through your debts, and this can be credit card debt, student loan debt, all of the forms of just amounts that you owe. Your income times the number of years you would want to replace your income. And so especially for parents thinking about those child rearing years, those are important years you'd want to have someone to be able to provide for your kids' needs. Next, the M is your mortgage, whatever's remaining on your mortgage so that your family can stay in their home. And then finally, the E is the education that you would like to provide. So this could be a college fund for your kids. It could also be a college fund. Something that I get really excited about is every birthday, I contribute to my niece's 529 plan. So part of what I would want to contribute to is actually making sure they have the education opportunities I'd like them to have.
I think that's great, Marty, and I applaud you on being the super cool uncle for doing that. You and I also talked about this previously, is that we're in a different generation for some folks in this 20s to 40s range where they call us the sandwich generation, or as we get a little closer to our 40s, we're taking care of other people outside of our immediate family too. Talk about that and how life insurance plays into that.
Yeah, for sure. And then just a personal story. My mom, she's been a hardworking nurse all of her life, and she's a little apprehensive about retirement, and she doesn't think she's saved enough. And I try and, assure her and say, you don't need to worry. I'm going to make sure that you're good. And so largely, actually, the most motivating factor for me right now, not having a child, and my wife, she's very gainfully employed, so she'd be fine without me, as crazy as that might sound. I really want to make sure my mom could retire comfortably and live well. So actually the first sense of urgency for me is making sure my income could go towards supporting my mom's retirement after all that she's done for me. So I'd certainly think about not just who's below you in age, your children, or laterally your spouses, but also your parents, your uncles, your grandparents that you might need to actually support as well.
Yeah, these are good conversations too, especially if you're married. Just maybe sit down and have these conversations with your spouse. Again, not the most exciting Friday night conversation, but it's an important one for sure. So when we're looking at these amounts, right? Okay, so maybe we determine the amount that we need. How long do we need this life insurance for? How do we determine that?
Yeah, I'd say the rule of thumb is just thinking through, and this is where you could maybe pivot that conversation from this is dreadful and I'm thinking about me dying to actually this is me thinking of how would I want my will to be carried out? How would I want my wishes and the things that I find important to come to fruition? And so thinking about, well, what are those crucial spending years? And typically your 40s are your peak spending years, your 50s are your peak earning years that I would like to have coverage. So the easy numbers that come up is making sure your kids are good, through college, making sure that your mortgage is paid off, making sure that any of those vulnerable years are certainly covered. And this could be also the vulnerable years of, early retirement for your parents. And so that is going to depend on each situation, but just really map out what's important and when might that change is how I would start with thinking of what are the term durations that are most important to me.
I think that's great. One thing that I haven't done, and I probably do need to do, is sort of reevaluating my life after getting a policy. I think I got our policies maybe 10 plus years ago, and our lives are very different than 10 plus years ago. So how important is it, or why is it important to reevaluate your life insurance situation as your life evolves?
Things change so rapidly. Like, as I mentioned, the children that I'm contributing to college funds aren't even my children. So you've got your family changing around you. You've got your own family changing. Maybe you've moved. Maybe I live in the Bay Area. Maybe your cost of living is higher than the insurance policy I would have bought when I was in North Carolina. So it's just really important. I'd say every year is a reasonable frequency to just consider. Take a moment. Has anything changed? If not, then I'm fine. If something has changed, then let's think, am I covering the amount and the duration that I previously realized was important for me?
Yeah, that makes sense. Let's talk about if maybe somebody lives in the Bay Area. Let's talk about that. There's one high-earning spouse, and then the other one has decided to be at home and raise the children, and then maybe stop their career for a period of time. So they're not earning an income, but man, are they providing such a valuable service. Why is it important for that stay-at-home parent to also consider life insurance?
It's critical largely because if you just think about replacement cost is a little austere because you're not replacing that loved one, but if you just think of what it would cost to continue the amount of impact that family member had been providing, it's expensive. As we were discussing earlier, estimates have that north of $180,000 a year. And when you really think about it, you're contributing the direct, let's say, support for transportation, for care, for food, for things like that. But there's also most likely you're not going to be able to pay one person to work all of the hours that stay-at-home parents are providing. So you're probably going to have to actually pay for many people to do this. And that's all assuming that you don't have additional support from family members in the area. My wife and I don't have family here. So we know that any type of support that we'd have to pay for would be completely paid. And we don't have a family to help absorb some of those costs. So it's critical for that unpaid, work to be considered and what it would cost to actually continue those services.
I think that's a really good point, especially for those folks that don't have family near them to help out. And another point on that is I interviewed a gentleman named Juan here in Michigan who lost his wife very early on in their marriage, and that was very devastating. Not only did the life insurance that they received support with those important tasks and functions that were a part of the relationship, it also gave him time to grieve. Gave him and his daughter time to grieve too, not going right back into work. You know what I mean?
Right.
Like, it's just having that ability to have a pause in between to say, okay, man, we're totally reevaluating our lives, and having the financial stability to do that can be, I don't know, it can be monumental, really, in a time that is very important in both your life as well as any children that you have as well. Let's talk about Ethos in this process. So how does Ethos support with this life insurance process?
For sure. Well, Ethos has really started to tackle this big problem of many, many Americans being underinsured. And so when we really thought about, well, why is that? Part of it is just because the process of getting it has over time become associated with things you don't want. You got to go through a very long medical exam. You have to have blood drawn. You have to have urine samples collected. Maybe you're waiting 8 to 10 weeks to get a no after all of that. And we just realized, well, no wonder so many people aren't getting life insurance. It's such a painful process. So at Ethos, we're a technology company that's really leveraging technology to solve many of these challenges in the life insurance space, to make it as democratized, as fast, and as transparent as possible, so you get what you need as quickly and easily as you can. And so that's really where Ethos, tries to brighten up a otherwise pretty dark process of getting this coverage.
Can you walk us through just the general steps? Somebody goes to your website, and how does the process work from there?
Yep. Log into their website. And then from there, it's probably going to shock you how easy it is. It'll feel like you're answering a few questions, and then all of a sudden you've done something that you might have been putting off for years. So it's a roughly 10-minute process. There's no medical exams, as I mentioned. It's all online. You're just answering a few health and lifestyle questions. And in the process of going through those questions about yourself and your lifestyle and your health history, you're actually being considered for a suite of products. We actually work with 4 life insurance carriers that we make proprietary products with them. So we make products especially with them that give you an opportunity to be considered for a range of different coverage options so that we can cover over 95% of households. It's not you're applying for one thing, you didn't get it, sorry. It's you apply for one thing and, well, this might not be the best fit or you might not qualify, but we have this product for you. All of that happens under the hood. And at the end of, a roughly 10-minute process, you have many same day coverage options that you can bind all online.
I love that. Yeah. So the major excuse for people is, it's going to take a while. I don't really want to do that, the online stuff. And then another excuse might be like, well, cost, those things are expensive. Talk to us about cost. What can somebody expect to pay?
That's something that we consistently find that our consumers or the families that we protect have vastly overestimated what the actual cost of, for instance, a simple term life policy is. And so for, let's say, a 35-year-old woman who's healthy and doesn't smoke, with Ethos, for less than $20 a month, she could gain coverage of about $500,000. So if she's making, $50,000 a year, we said that quick rule of thumb, 10 times your salary, she could meet that estimate for less than $20 a month and have that done in, 30 minutes today on her cell phone.
I love that. That's I think I just got an email from Spotify. I think it's my Spotify's going up to like $20 a month. So if I can afford Spotify per month, I can afford this, right? Absolutely. So you talked about Ethos as a company. You guys are technology focused. What makes you stand out amongst the other folks that are out there? I'm sure there's a lot of people getting a lot of emails from different places or going on Instagram and seeing ads that they should have life insurance. What makes Ethos different?
Yeah, so our broad range of coverage options and the ease and the speed are certainly the most immediate things that come to mind, but we also have been continually improving what offerings we make available, such as with most term policies, clients can get a free estate planning tools, so they can get the ability to plan their will, their trust, advanced medical directives. All of these things come with most term policies. It depends on the state what exactly, but we're really a company that's built end to end to make this process as easy as possible, including if the unfortunate time does come where that policy needs to be redeemed, the experience is just with Ethos. So you get that seamless interface and ease of accessing policy documents all from your client portal, which can be accessed on phone, tablet, laptop, desktop. So just making that experience seamless from end to end, from application to policy administration is where we really try and make life insurance not as prickly a pear as it's been for so long.
Got it. Well, it sounds like you guys have had some good feedback from customers too. Can you share any personal stories of any feedback from customers that you had that we might want to share today?
Yeah, I actually was speaking to a company that actually is a life insurance company that would like to provide Ethos to their clients. And when I was going through a demonstration, I actually had one of the gentlemen said, well, I'd love to interrupt if I can, as I was showing the screenshots of what the process looks like. He said, I actually was an Ethos customer just 3 months ago before I even started working at this life insurance company. And it just 10 minutes, I thought I was answering some questions to get a quote. And then I realized that I'd actually already applied. I bound coverage immediately. I got my wife started and it was just so quick. I was like, I had to call in to make sure I really had gotten coverage. And they're like, yes, sir, you're all good. We got you set up. And he was in shock and awe as a customer before he even became a partner to work on providing this opportunity. So it's just shocking how seamless it is. And that's what we really strive to improve day over day, week over week.
I love technology. I love what fintech has done to processes like this and what Ethos is doing. Marty, this is fantastic. As you guys all know, as we talked about at the top of the show, Ethos is a sponsor of this podcast. So if you want to check out Ethos, you can go to marriagekidsandmoney.com/ethos and support the show and get your super fast lightning quote as Marty talked about already. Marty, thank you so much for your time today. I really appreciate it.
Oh, it's been a pleasure. Thanks for having me and have a great rest of your week.